don't spend a lot of time on macro because I'm useless at it. I don't think I'm any good at predicting what future inflation. There's a different schools of thought on inflation. There's a very strong view that these things were temporary because of supply chain hiccups and such we had in COVID, and maybe a year or two from now, we might be in a different place. So there are just different views on it. So who knows which way it goes. But I think that if you make investments where the margin of safety is very large, then I think whether inflation is 1% or 7% would tend to be a rounding error. And also there are businesses where inflation can be a tailwind. So let's say, for example, you own a bunch of apartment houses, okay, and you're done. The portfolio is there. You've already made the bets and all that, and you believe a lot of inflation is coming. Well, your portfolio would do really well because your rents would rise with inflation, but your costs wouldn't, right? You already spent yesterday's dollars on the capex and the down payments and all of that, and you're collecting rent in tomorrow's dollars, which are inflation adjusted. So you're in good shape. Your asset is increasing in value, and your fixed rate loans are actually worth less. The lender's getting screwed, not you. And in that environment, you do well. Now, if you're going to be buying a lot of apartment houses in the future, then inflation can be a negative, because now you'll have to pay up, and who knows if rent can keep up or not, and all of that. So that becomes an issue. I'll give you an example of investment I made where inflation is very extreme. And I knew it would be extreme, and I still made the investment. And it has worked out exceptionally well, and it'll keep working out well. So I made it, and since you mentioned, I think you guys got started in real estate. I was in Turkey in 2019, my second trip to Turkey, Istanbul, great place. I just spent 3 weeks there. And I visited a business where the market cap was $20 million. And I was told that the liquidation value of the business was more than $800 million. And so this was a company that had 12 million square feet of warehouse space in 82 different warehouses around Turkey. A lot of it was in Istanbul because 40% of the GDP of the country are around Istanbul, but it was spread out all over the country. And they had a bunch of other businesses besides this. That 12 million square feet was 99% leased, long-term 10-year leases. And the tenants were blue chip tenants, Amazon, IKEA, Carrefour, just awesome tenants. And the leases were inflation indexed. So every year, the rents went up based on changes to the CPI. And so it took about 10 minutes to do the math. I never used the calculator. So there was 12 million square feet. The construction cost at that time in Turkey was about $40 a square foot. And the cost of the land, depending on where you were at, were between $20 and $40 a square foot. So a constructed warehouse was between $60 and $80 a square foot. So if you took let's say a $70 average, for example, and then you multiplied it by 70, so that's $840 million. Okay, so without debt, that's the value. And a lot of their warehouses were in Istanbul, so it was skewed closer to 80 than 70 in terms of the actual price. And there was 200 million of debt. So even if you took it at 840 million and got 200 million debt, you have 640 million. And the market cap is 20 million. And so basically the market cap is sitting at something like 3% of the liquidation value. And there were a bunch of other businesses on top of this business. But I didn't even care about the other businesses because those were harder to value. And there was no debt on those businesses. So those were pure assets. Like they run the largest freight train network in Turkey. It's a large business. They have about like 700 containers going back and forth between Turkey and Europe. And they have the largest truck fleet in Turkey. And they have a forklift rental business. And they have these vehicle inspection stations that they have like a long-term contract. So there are a bunch of different businesses. They're all like monopoly or near monopoly businesses. At the time I invested, the lira had just devalued. It had gone from 3 lira bought you $1 to 5 lira. And inflation was running rampant. The expectation was that future inflation would be 50% a year, 50. As soon as I could satisfy myself that there was no fraud here and that the things where, I spent an afternoon visiting the warehouses and assuring myself that the CEO and father-son team that ran it seemed completely above board to me and such. Once I eliminated fraud risk, I just started buying every share I could. And we own about 35% of the company. I was shocked I was able to get that many shares. So $7 million bought us about 35% of the company, which we still own. Inflation from 2019 to now is about probably 40-50% a year. Okay. But like I told you, the story of owning a home, if there's inflation in the future and I'm not building more warehouses, my warehouses are going up in value, my rent is going up, everything's going up. And so I can't lose. I can't go backwards. And so I said that I'm buying at 3%, and I don't think there can be value destruction, because if there's inflation, then cement prices go up, steel prices go up, land prices go up, everything goes up, and rents go up. Okay. And what the company was really good at is in the middle, they got a chance to refi at lower interest rates. So Turkey is weird. They've kept their interest rates low, but inflation is running very high. So from 2019 till 2022, the debt went from 200 million to 90 million. They paid off a lot of debt. And the blended interest rate is 14% on their debt. So they're getting 25% CPI increases because the government suppresses the CPI numbers to show that the inflation is lower. So inflation is really running at 50%, and they only get about 25%, but their debt is at 14. So it doesn't matter. They're still collecting, and debt versus the value of the asset is almost nothing. Most of it is sitting in equity. And what they said is that they really get a market rent after 10 years when the tenant leaves. Because in the meantime, you've got this suppressed increases in rent. So they're getting further and further away from the market rent. Finally, the tenant leaves after 10 years. And then they're able to re-rent it. So there's a big shortage of warehouses. And so probably 15%, 20% of the footprint is at market rents. And a lot of the older leases are way below market. So every year the rents keep going up. And which is great because the footprint, they're not able to expand it much because banks are unwilling to lend and things, which I like, but I just want them to stay with that footprint. And now 90 million debt, and they've spawned a new business. They're a spawner. They started a solar business, which has added about 200 million to the intrinsic value. So the intrinsic value today in dollars is higher than it was in 2019. The lira has gone from 5 lira to the dollar when I invested to almost 14. Okay. So we got clobbered on the lira. The investment is now, the market cap is over $100 million. So it's still deeply undervalued, but it moved up about 5x. Okay. So and it's still got a lot of room to run. So what I'm saying is, we knew there was inflation. Like I know already a year from now, the lira will be at 20. And I know 2 years from now, it'll be at 30. And I know the investment will still be, no issues. And so that's an example of where 7% inflation is making up. Come play at 50% inflation and still keep your shirt on. So that business has done well, and they've been very smart about how they've, used the bank debt. I mean, I think the banks get hosed and the depositors get hosed. You don't want to be sitting on bank deposits, bank paying you 10% or something in that environment. But that works out okay.
It sounds like a big part of that success was the ability to raise rents for their property. And then also just that giant margin of safety. And actually, my next question would be, how did you find it? Was this a publicly traded security, or was it a private business?
It's publicly traded. It's still cheap. Nobody wants to buy it. So every professional investor has exited Turkey. They got freaked out with the whack job fiscal policies, and they all sold everything and they all left. I spent 3 weeks in Turkey. I think it's the most amazing market to invest in. So I only look at stuff where I just understand the inflation is there. So for example, I'm not going to invest in this company, but just to give you an example, there's a juice company in Turkey, publicly traded, very large packaged juices, and 98% of their product is exported. So their costs are in lira and their revenue is in euro. And Turkey is part of the European Common Market, so all their exports go duty-free all over Europe. So as the lira has depreciated, their input costs actually have gone down versus the euro, because the exchange rate that they convert to is so favorable. So wages have not kept up with inflation, and other costs have not kept up with inflation. So this particular business, for example, does really well in a high inflation environment. So in general, in Turkey, if you are a business where your revenue is in euros or dollars and your expenses are in Turkish lira, a high inflation environment is not going to affect you. And a lot of devaluation is probably going to give you tailwinds. So if I just limit myself to businesses which fit that equation. So even this company I bought, Resas, the real estate company, a lot of their leases are euro leases. So then they just automatically, they don't even need to bother with the exchange rate, because in lira it's so high. And so basically, but the thing is that professional investors look at it in broad swaths. They say, oh, Turkey, bad economic policies, crazy macro environment, whatever else, we're out of here. And when you have that type of mass exodus, you are going to get mass mispricing. And so I found some businesses in Turkey that I think would not be hurt with inflation. They would not be hurt by devaluation. And they have a lot of tailwinds, and they're really cheap. So life is good.
Do you just view this as an opportunity then to potentially acquire more shares or find other opportunities in that market?
Yeah, we are buying every day.
You have a focus on emerging markets in general, like India and Turkey, for example, as well as China. And investors here in the U.S. seem to have some fear over these markets. For instance, China, most recently. Could you talk about that? And what attracts you to foreign markets?
Well, I think you're better off not being too jaundiced about where the company is based. And I think to really look for really well-run businesses with great leaders, which have the ability to withstand any headwinds that their locations will produce. Right? So this real estate company in Turkey, if its market cap went to $1 billion tomorrow, above its liquidation value, I gave you liquidation value. I did not give you intrinsic value. If it went to $1 billion tomorrow, I would not sell a single share, because I believe that the father-son who run it are really good capital allocators. The son is really young. He's actually very gifted. And they're very creative. And I think that they will continue to add value. So I believe in 10 or 20 years, that company might be worth 5, 10, 15 billion. Who knows, right? I own 35%. I just want to sit on that 35%. And so if it gets to 500 million, that's fine, but we're not selling billion. We're not selling $1.5 billion today. We'll think about it. But below that, we have no interest. And even $1.5 billion, I'm not sure I'll sell. 2 billion, I'm out of there today. But I hope it doesn't get there, because I think it's a much longer runway long term and such. So I think that what I'm really focused on is finding businesses that have great managements, very protected monopoly-like products, great returns on capital, and then seeing how that overlays with the country there. And sometimes we'll make mistakes. But in general, humans vacillate between fear and greed. When you get extreme greed, you get extreme mispricing in one direction. And when you get extreme fear, you get extreme mispricing in the other direction. This is the nature of auction-driven markets. The warehouse operator, which was sitting at $20 million, they could sell one single warehouse in the next 10 minutes for 70 or 80 million. The largest warehouse would probably get them 70, 80 million, like that. And I think they had told me that they sold 2 warehouses, one of the largest one and a second mid-sized one, out of 82, 2 out of 82, the debt would go to 0. So they could just take the count from 82 to 80, and private buyers will just pay them what it's worth. They're not even going to look at the stock price. And it's anyway, the whole business is not available. It's not available for sale. You could buy it in the market fractions, but you can't buy the whole business at that price. So I think that it is in the nature of auction-driven markets that they can vacillate quite widely. And, if you look at any business, look at IBM, New York Times, or any publicly traded company, just look at the 52-week range on that stock. It might be like 50 to 120 or 70 to 120, something like that. But if you look at your own home, how much does it change in a year? What's the lowest it goes in a year and the highest it goes in a year? Recently we had some movement, but in most years it's like less than 5%. It's like nothing. So, but if that home were a stock, publicly traded, it would go all over the place. So the same asset as a listed company will behave very differently than it behaves as an unlisted private asset. And so because of that fluctuation, we can do well. I would not be able to do well in Turkey if there wasn't a stock market. If I had to go negotiate individual deals, like if I went to this company and said, hey, I'd like to buy all your warehouses, they'd say, well, at $1 billion, it's not for sale. Okay, that'd be their answer to me. Warm regards. So it's really the auction-driven markets that give us that opportunity.
You talked about auction-driven markets and how they can create greed and fear. Where do you think that we are now in general, Mohnish, with the U.S. markets? Could you peg us on one side or the other?
Well, I don't think the markets are in bubble territory. I think that there are slivers of the market that are in bubble territory and have very weird mispricing. I think the whole crypto thing is a bubble. I think that, the meme stocks are bubbles, AMC and GameStop and all of those. I think those are bubbles. But I don't think the bubble extends to more than like 10 or 15 stocks. It's a small area of the market, and maybe crypto is another area of the market that has bubble-esque characteristics. And I don't really need to be wrong or right on that, because I'm not going and shorting those, right? but I would say that it's not clear to me Tesla's overvalued. It's not clear to me, Google is overvalued, or anything like that, or Apple's overvalued. Those are very strong businesses, and they could be strong for a long time. And in a low interest rate environment, those earning streams are worth a lot. So I think for the most, but I don't think they're in bargain territory. So I would say that the US markets, for the most part, are not in bubble territory, except for a small sliver. But it's very hard to find things that are 50% off or 70% off. I think those are few and far between. And that's why I spend more time in places like Turkey, because I think a lot of rationality has gone out the window.
Can it be as simple as PE ratios when it comes to value? What is your interpretation of how you can apply a PE ratio for a value of a business?
Yeah, PE ratio is not very useful. There can be a company which trades at 4 times earnings and it's overvalued. And there can be a company which is trading at 80 times earnings and it's undervalued. So the correct way to value a business is to understand what kind of future cash it is likely to produce over the next 5, 10, 15 years, and then discount that back. And so a 4P company might be declining, for example, melting ice cube. The earnings are going down 50% a year, for example, or in negative territory. And it may not be worth even 1 time's earnings, So whereas some business is growing 40% a year, and it deserves to be at 100 multiple because it's just got so much strong tailwinds for such a long period. And so what we want to do as investors is we want to look at no-brainers. We want to look at things where we don't need to do a DCF. Where now I'm not going to find things like my Turkey example. I mean, in 30 years or 29, 28 years as an investor, I don't think I found, other than that one, at like 4% or 3% of liquidation value. It's happened once in 30 years or once in 28 years. Okay. But you don't need it to happen more than once or twice. Okay. If that business gets to be a $3 billion or $5 billion business in 10 or 20 years, we're done. It doesn't matter what else we did and how wise or stupid we were on other bets. This bet alone would carry us. If it's a 10% bet and it does that, 7 million becomes a billion or something. We are 100 bagger. No problem.
Now, how does a deal like that come across your desk? Is this you going through filters?
Well, so when I went to Turkey, the good news with the videos people like you put out is there are fans of Mohnish globally. And the thing about these fans of Mohnish is like some of these guys, like my friend in Turkey, they are running value funds. They're very well versed in the intelligent investor, and they've read about Buffett. Many of them have come to the annual meetings, and some of them have attended my meetings, for example. So, for example, my friend in Turkey runs a fund, and I think he visited California, attended my meeting in like 2014. And I just looked at things that were going on in Turkey that looked like a lot of fear in 2018. So I asked him, I said, look, if I come to Istanbul, could we just visit everything you own? Just visit every portfolio company that's in your portfolio? Because I know how he thinks. He understands Graham, and I know how he thinks. He said, it'd be a pleasure. I said, then let's do it. And I said, do you mind if I buy stuff that you own? He said, I'm done. You can buy whatever you want. And so I just went with him and spent a week, and I just visited every company in his portfolio. And so it's already been through, the shameless cloner. Already went through one filter. The guy is smart. He's a very smart guy, and he's very thoughtful, and he knows these businesses cold. He knows the families. He's giving me history about the cousins and the uncles and everything else, what's been going on for 30 years in that business. I mean, stuff that I would never be able to figure out, right? And so I'm bowling with bumpers.